Welcome to our channel where we dissect the latest happenings in the business world. Today, we're diving into Netflix's recent performance. In the world of streaming, Netflix is experiencing a strong rally, making it a promising investment for the year 2024. What's driving this momentum? A number of factors, in fact. The end of the Hollywood strikes, for one, had a minimal impact on Netflix's operations. The company was able to release most of its flagship Netflix originals, keeping its content fresh and engaging for its viewers. The third quarter of 2023 was particularly noteworthy. Netflix reported robust revenue growth and exceeded expectations in net subscriber additions. This strong performance didn't just happen by chance. It was driven by the company's strategic focus on both its membership growth and pricing growth. But that's not all. The company has also seen an increase in membership in ad-supported plans. This is a significant development as it not only diversifies Netflix's revenue streams, but also provides a boost to its earnings from advertisers. It's clear that Netflix's strategy is paying off. The company's success isn't solely dependent on new content. Library content, such as the legal drama suits, has proved to be popular among subscribers, showing that a diverse content portfolio is key to keeping viewers engaged. Looking ahead to fiscal year 2024, Netflix is optimistic. It expects continued revenue growth from both membership and pricing. And while it plans to spend more on content, it has several levers to raise its margin profile and earnings. These include successful price increases and maintaining strong subscriber engagement. In conclusion, Netflix's recent performance paints a picture of a company that is not only weathering the challenges of the streaming world, but also poised for growth. Its strategies are paying off, and it's set to gain more market share. While Netflix plans to spend more on content in FY24, it has several levers to raise its margin profile and earnings. With successful price increases and strong subscriber engagement, Netflix is set for market share growth. Now let's shift gears to discuss a major development at Netflix, a change in leadership. The streaming giant experienced a significant shift at the helm with co-CEO Reed Hastings stepping down. He has assumed the role of executive chairman, passing the torch to COO Greg Peters, who has now been elevated to co-CEO. The news of this leadership transition came as a surprise to many. But what's more fascinating is the market's reaction to the announcement. Despite Netflix's stock being in a long-term decline, down 38% since the start of 2022, the market reacted positively to the news of Hastings' departure. The stock price jumped almost 6% in pre-market trading following the announcement. But the leadership transition isn't the only headline-grabbing news from Netflix. The company's fourth quarter results showed a surge in subscriber numbers, with an addition of over 7.6 million subscribers. This was a pleasant surprise, surpassing the forecast of 4.57 million. This impressive increase in subscriber numbers is largely attributed to the release of popular shows like Wednesday, Glass Onion, and Harry and Meghan. These shows have not only managed to capture the audience's attention, but have also played a significant role in driving the company's growth. Now, the question on everyone's mind is, what's next for Netflix under the new leadership? With a proven track record, Greg Peters, the new co-CEO, is expected to steer the company towards continued success. While Netflix's stock has been in a long-term decline, the market reacted positively to the news of Hastings' departure and the strong subscriber numbers. As we move forward, it will be interesting to see how this leadership transition shapes the future of Netflix. Finally, let's look at the bigger picture, the battleship game between streaming and traditional cinema. AMC Entertainment Holdings, a stalwart of the cinema industry, saw its shares trading down, even after posting better than expected quarterly results. A deal with Warner Brothers was forged for an exclusive movie release period for cinemas. Yet the financial landscape didn't quite paint the picture of a blockbuster hit. The stock market is a fickle creature, often reflecting the shifting preferences of the public. In this case, the increased popularity of streaming movies has been a significant factor. Imagine a world where you don't have to leave the comfort of your couch to watch the latest releases. The convenience and accessibility offered by streaming platforms like Netflix appear to be luring audiences away from the traditional movie-going experience. AMC, however, isn't ready to roll the end credits just yet. The company has announced plans to accept Bitcoin as payment for tickets. It's a bold move, embracing the digital age in a bid to adapt to the changing times. The question that remains is whether this innovation will be enough to draw audiences back to the cinema. On the other side of the coin, streaming giants like Netflix are experiencing strong rallies in share prices. Their secret? A combination of successful price increases, strong subscriber engagement, and a return to fresh content production. This has resulted in a significant market share growth for the streaming platform. So what does this all mean for the face-off between streaming and traditional cinema? It's a tale of adaptation and innovation, of old-school charm versus digital convenience. As streaming platforms continue to grow and traditional cinemas strive to adapt, the landscape of the entertainment industry is set for a dramatic transformation. And there you have it, a snapshot of the current state of the streaming industry with a spotlight on Netflix. We've explored the recent rally in Netflix's performance, driven by strong subscriber additions and successful price increases. We've also examined the leadership transition as Reed Hastings steps down, making way for Greg Peters. And finally, we've discussed the ongoing competition between streaming platforms and traditional cinemas, with AMC's attempts to secure exclusive release windows. Remember to hit that subscribe button for more updates on the latest events in the business world. Until next time, stay informed and stay ahead.